Good morning, everyone. Welcome to our Tuesday morning trading room. Hold on 1 second here. I'm going to get you my monitor. So what we're looking at here is the NASDAQ. For those of you new to the room, let's take a look at what's been going on in the NASDAQ here in the overnight. And you can see that it's been a pretty subdued session. Kind of more of the same of what's been going on yesterday. We did see the market tail off a little bit yesterday. And we had, when did we close the room up? We closed the room up a little bit early, right around here. And then the market finally did tail off and hit our profit objective on our Eagle trade. But after that, it was just a very difficult trading session. A little bit of a rally in the overnight. In the Asian, nothing substantial. The Euro session brought it back down, only to bounce back up. And here we are. So the market's still very much lacking direction. I have a feeling this FOMC meeting on Thursday is going to be really substantial, really going to light up the marketplace. So we'll see what gives, if we can find a half decent signal here this morning, or if it's going to be more of the same sideways action. Just out of curiosity, maybe I'll take a look at the Euro this morning. Where are you? There you are. Because I'm looking at soybeans and crude oil also, and not much going on in either of those. Soybeans very sideways also. And crude oil putting on a slight rally, but still a lot of yellow bars on the hawk. Not really a whole lot to take advantage of. And right now the euro is not looking all that enticing. We've got the hawk printing here. And I know we dialed down the settings. These are the higher settings for the euro, but even so, it looks like this market also very sideways, although a little smoother. So if you were inclined to trade the European session, or if you happen to live in a time zone where this is your native time zone, it looks as though the euro offered some fairly decent moves last night. A little bit of a move lower there, on the hawk at least. And here we are sideways for the moment in the European session. Trying to produce a first micro-macro cross / macro pullback, but now that's moved into yellow bars. So that's pretty much nixed that. I'll go back here to the NQ. Oh, maybe I shouldn't have looked away. We had a quick little move to the downside there. Well, it's just a few minutes into the open. We got to give them a little time to settle in. All right, well, we did get that late filter entry signal and that first micro-macro cross. I would have probably tried the first, well, I might have tried either or. I'm not so sure I would have tried both of them. And now we're into a macro pullback. What time is it? 6:35. So they just 5 minutes into the session. And here they come again. All right, well, we've got a couple options. They're all shaping up more or less the same. Let's see if we can't do this here on the Raptor. So essentially, this is almost like the rule of three type scenario on the Eagle. If I go over to the Eagle, you'll see what I'm talking about. So we've got the trading band. We're producing signals against the band. We've produced two signals so far. The problem is we don't have a real test of the extreme yet. So it may be that the market's going to try to push through, find the bottom end of this trading range. We do have a good opportunity here for a second push on the entry. This macro pullback here on the Hawk had a little bit of follow through. And right now I think we can safely cancel that on the Raptor. Although I suppose if you just wanted to park an order there below the lows, there's no harm in that, at least not right now. It looks like we're hunting for that test of the extreme now. Oh, actually coming back with a buy signal here on the Eagle. We're getting a red bar buy, so very, very conflicted market. In fact, I'm even wondering about just doing an OCO order here, bracketing the high and the low. So if this continues lower, it's going to confirm our rule of three. That's a little bit of a shot in the dark here, folks. We're still early. We don't have a whole lot of structure, but there is a possibility. You could, like I say, even just bracket this range. Breaks, this bar is going to set the tone for the market. If it breaks higher, actually, why don't we do that? We'll use our OCO order. So if the bar breaks higher, it's going to likely send the market higher, and if it breaks lower out of this range, well, then it's likely going to see the market tail off a little bit. Not much of an opening gap per se. And how do I know that this bar, this current bar, is the important one? We'll just take a look at it. We bounced off of support, right? We have support here, support here. Market went up. It should have continued higher, but instead it stopped dead in its tracks, tried to head lower again, and then it's pushed right back up. I suppose if you wanted to be ultra aggressive, you could even just frame this bar. That's one advantage day trading has over end of day trading, is when you get to see how the bars unfold, you get a better sense of the overall momentum. All right, so here comes our other sell signal. We will have a full rule of three if in fact this market does break down through these lows. Come on. You got to move one way or the other. Okay, so it did it again. Hold on 1 second here. I have got to send Ben my file because I told him next time it did this, I was going to send him the information he needed. And he said to get him to him right away, so bear with me here just a moment. If you don't know what I'm talking about, I'll show it to you here in a second. Okay, so it's not a, it's hard to call it a bug because it doesn't do it all the time, although maybe that's the definition of a bug. When I placed the OCO order, as I did, it's only supposed to cancel one side of the order. Namely, we got filled to the short side. It was supposed to cancel the buy order and enable a stop. Instead, it's scrubbed both sides of the trade. Yes, it did. Now, the upshot is it didn't cost anything. The downside is if this market exploded to the downside, my OCO malfunction has kept me out of the trade. So Ben checked all the programming, everything was okay, but he says if it happens again, send me the files, the appropriate files, and he'll look into it. So I just had to get him those details real quick. And what we're going to do here is we're going to engage a stop up there. And just like yesterday, I'm going to try to be very liberal with my stops. I'm going to do my best not to move them. This is simply a safety net, nothing else. You can tell although the bid and ask numbers look half decent, the volume looked very light because I believe they slipped us a tick on the entry, which for the NASDAQ is not crazy. It's not crazy slippage. But it is a little annoying. All right, well, we'll just let that simmer and see whether or not we can get enough out of them here to give us something tradable. Another trend change signal / late filter entry here in the Falcon. I don't like to see too many of these develop in a row. We had one back here, which came early. There was lots or more room down here to do something with it. The way it's printing right now, well, I suppose we still have a little bit of room to our primary support. The structure just doesn't seem quite as inviting as the other one. And like signals on all our tools, we don't want to see them repeating too often. If they repeat too often, then that's sometimes a sign of weakness. Our Raptor trade moved to the break-even trigger, and I should have actually held it back. In fact, what I'll do, don't do this at home. If you're in this trade, I would allow it to go to the break-even, but I'm going to cancel it here just for the moment to see whether or not we can actually get enough out of this swing to get to our profit target. I would be very happy with a break-even trade given today's market condition, or just grab the 50-60 bucks and open profit. I know it doesn't sound like a lot, but it sure beats a $50 or $60 loss, or a $250 or $60 loss. We do have a fair amount of support down here. What I'm trying to do is to see whether being really conservative with my stop, ultra conservative if you will, if I can get to that profit target. And if you remember from a few days ago, 42.90 was a pretty popular number in the NQ. And our first profit target just sitting around that 42.93 mark. This current bar, another one of these very decisive bars, where you can see this is where the buyers have drawn the line, and this is where the sellers continue trying to push the market lower, which is why I said break even at this point would be okay. Because if this market closed higher, then it would very likely see a larger reversal. Okay, so we've got one other open contract here. I'm going to take that now to break even. We've hit the profit objective on the first one, so now I feel like I'm playing with their money. Same idea. If the sellers fail at this point, where they worked so hard to drive the market down, then we're probably going to see a little bit of a larger reversal, probably a good time to get out. And there we go. All right, so we'll see now how much more of a reversal we actually get out of that. But hey, we picked up a little bit of a profit on that trade, so I'm pretty happy with that. They very likely will run our stops if we had them here. I don't think they're going to, if we held our initial stop up here around 43.06, I don't think that they're going to be able to run it that high. Not yet anyway, but we'll see. 43.06, of course, was our median line here on the support and resistance suite. And 42.90, our primary support. And also that very popular number from, well, this last week, I suppose. Definitely the kind of day you want to pick and choose. Soybeans made a little bit of a run up. Hold on one second, I'll get you those details. All right, here we go. The only real signal we had on soybeans was here on the Eagle. We had a red bar buy, a nice little hard edge bounce, red bar buy, fairly probable signal, a little bit of a run up. Soybeans, I tend to stretch the profit objective because normally this market trends very well. So you can see we're not even at our $200 mark just yet, or actually maybe we did top out at 200. But at any rate, looks like soybeans trying to get a little bit more bullish. Did not get the signal on the Hawk or the Falcon. The market moved a little bit too fast. You can see that. Oh, actually, a couple days ago, soybeans had a decent range. Oh, very strong range. That would have been last Friday. There may have been an agricultural report come out, but yesterday's session, Monday's session, fairly subdued. And so far Tuesday, also trading within Monday's range. So looking a little bit more bullish, but really not much tradable in soybeans at the moment. A question here from Tony. Tony asks, good morning. Could you explain how to effectively use the Omni? Now, I'm assuming you're talking about the Omni timer, not the Geiger counter. This is the Geiger counter. I know it looks a little bit like the Omni timer. So I'll show you the Omni timer, and you can correct me if in fact you meant the Geiger counter. All right, let's throw the Omni timer on here. Where Where'd you go? Omni timer. Okay, the Omni timer's got a couple of different settings available. We'll go with the large display right now, but there's also a smaller display. You can have it count up, count down, or relative time to average time. This one was always Ray Burke's favorite, the relative. The counter simply counts how many ticks you need to complete the bar, which is okay if you're following a time-based chart. It's very helpful to know how much time is left on the current bar. Or if you're using a larger range bar than the mean Renkos here, because they fill rather quickly. But the Omni timer will tell you, if you use the relative time to average, it will tell you how long it takes the bar to form relative to the rest of the bars. So it averages out. And what you can do is you can change the size of the average also. So right now it's only looking back 10 bars. Let's say we're going to have it look back 50 bars. So it'll pretty much average this morning's range. Right now we're well into the red, which means this current bar is taking a lot longer than the average to form. Now there's two opposing schools of thought here. Ray Burke always suggested that if a bar takes too long to form, it shows a lack of momentum in the marketplace, and therefore he tended to be a little bit more leery of the signal that was printing. There's a lot of truth to that. The problem is that sometimes it's not just that the market is lacking momentum. Sometimes it's the market is struggling with the current bar because there's a real battle going on between the buyers and the sellers, similar to what we saw on the Eagle just a moment ago. So you can see these bars forming a little bit faster now relative to the last 50 bars. They're kind of forming in average time. So now we're into the yellow zone, which would be fairly average for this bar. It looks like it's going to get a little bit longer here also. So what I tend to do is I tend to take a look at how the bar itself is forming. If it's an obvious struggle between the buyers and the sellers, as we were looking at on the Eagle, then the amount of time it takes to form the bar is not really relative. If, however, on a day like today, where this bar right now, you can see is just dead, we're going to produce a double dot signal here to sell. I'm probably not going to pay a whole lot of attention to that, just because there's no obvious tug of war or fighting going on between the buyers and the sellers here. The nice thing with the Omni timer also is that you can use the smaller version, which doesn't take up as much real estate. And you can drag it all over. I like the Omni timer more when I'm using time-based charts. Okay, so now these signals are producing a little bit faster. This is actually a trend change signal, so it looks like the market's a little bit more lively. So you could take a look at perhaps buying it on a move higher. And now I would really be looking for momentum. This is, once I'm in a trade, this is when I'm be paying more attention to the Omni timer. See how quickly the next bar formed? That's showing that there's actually some buying pressure going on. Actually, I could leave that up there, couldn't I? So this is our trend change signal on the Falcon. The problem with this signal, of course, is the Falcon has not really given us a test of the extreme yet. We're on the other side of the median line, and we know there was some buying support right here, so I'm hoping that we're going to get a little bit more follow through. So while we watch that play out, Mark is asking me here about the trade forecaster. Okay, so Tony's asking about the Geiger counter, which I'll go over here in a moment also. We'll just let this trade simmer. I'll deal with Mark's question first. Good morning, Eric. Looks like our trade forecasters are still off slightly. Today it's only 10 minutes different, which is a lot closer than yesterday's. Yours shows trend for another 41 minutes, mine for 49 minutes. Did Ben have any words of wisdom for why there is a difference? Yes, he did. And I'm going to bring it over here because it's a little technical. Essentially, it's the data provider. So first off, Ben says, make sure that everybody has the same session template as I do. And I do believe that, Mark, you and I are running the same number of days. Excuse me. Pardon me. We're running the same number of days, and we have to have at least 25 days loaded. That's the minimum required for the trade forecaster to function. But he says this is not as simple as it looks. Requesting 25 days of data does not mean that their data provider has given them that many days of data. Data delivery is oftentimes reduced/restricted during market hours. Also, there cannot be any gaps in the data. If they are missing an hour or two on a particular day, that will certainly affect the output of the indicator. In summary, the indicator is highly dependent on complete, accurate matching data. So I'm running Kinetic. I'm not sure who your data provider is, but obviously there is a slight discrepancy between the two. And, you know, they're computers. What can you say? I know a lot goes off of the computer clock itself. So if my computer clock is a few milliseconds or even a second or two different than your computer clock, that will make a difference also. So yeah, Mark's running Continuum and he's got 45 days of data. So it seems like, you know, it's nothing that you're doing. It's just the data stream itself. And occasionally, I know we've had people in the room who say, well, my support and resistance suite doesn't match yours. Listen, folks, it's not that my data is necessarily perfect and yours is wrong. Yours may be more right than mine. But try not to, you know, take these indicators so literally. Like notice here, I came up a few ticks short of the 4290 mark, which would have been my primary support. This is close enough. This is close enough for me for primary support. Yours might be reading 4292 and hit it right on the number, right? And same thing up here. I came up a little bit shallow of the primary resistance line, and yours may have skewered it right on the mark. So it's not necessarily that mine is more right, but don't get so caught up in the tool itself that you forget what's going on in the price chart. The tool is here to help. You know, when we had this late filter entry signal back here, it was too early for me to consider it, but still it was a late filter entry signal. We had a little bit of a reaction here off of the median line, bounced up, came back, looked like it was going to try to breach. That would have been worth trying. That would have added some strength to this late filter entry signal. Breached, got through, kept bouncing on the underside of the median line, produced another signal, or actually produced a signal down here. That would have been worth trying based on the reaction to the median line. Now we're through. The median line is offering some support. It's worth a try to try to buy this one up. But because the market fudged the median line, you know, by a couple of ticks, if your median line was reading 4303 and mine reads 4305, obviously that's a slight discrepancy on the data, but not so much to negate this line entirely. And same thing with the other tools like the trade forecaster and the day ranger and so on. Okay, it looks like this is going to be our opening range. We're near the top end of the trading range, which is no doubt why the market is struggling a little bit. Okay, so Tony's original question had to do here with the Geiger counter. How would you use the Geiger counter? It's going to be a little bit more difficult to display today because the market is so evenly matched. But a lot of times what I like to look for on the Geiger counter is I like to watch the needle. So now that I'm in a trade, the needle currently is very neutral, but I certainly wouldn't want it to see the needle turn full on red. The envelope here around the current bar, this is also part of the Geiger counter. This is telling me that short term or immediate short term, well, the market was bearish there for a moment. We had that little red envelope around it. If the needle got full on red, then I would think seriously about bringing my stop in or perhaps stopping out for a small loss. I would much rather see the needle turn green, which would tell me that there's a lot of buying going on. A lot of the bid getting hit here. If I can, oops, wrong tool. 1 second here. Let's see if I can get a dome going. All right, so here's the dome, and is it going to give me the numbers? Shoot, why not? I don't know what's up with my dome lately. It used to work all the time. Well, actually, I haven't used the dome for a while. That was back with Zenfire. All right, well, if you pull up a dome, you're going to see the various prices and the bid and ask numbers on either side. That's currently what's being displayed here on the Geiger counter. Well, we know if there's a buying frenzy, the numbers on the bid just keep getting hit and the market just keeps going higher, higher, higher. Likewise, if the market is moving lower, you'll see all the sell orders get hit and the market will collapse to the downside. The other thing I like to look for are spikes in the tape. This is kind of gives you a visual of how the buy and sales have been, or pardon me, the bid and ask has been unfolding. And right now it looks like it's fairly evenly balanced, right? There was a little bit of buying pressure here or a little bit of selling pressure. It was absorbed. It's fairly even. But sometimes you're going to see it get lopsided. Probably not for the next couple of days. But usually you'll see periods where there's a lot more buying or a lot more selling going on, and the tape will actually start to get a little bit skewed, just confirming that there's more buying or selling pressure going on. See, now our needle is getting a little bit more bearish. Not too serious yet. But the Geiger counter was developed in response to a member asking, I'm in a trade, how can I tell if I should stay with the trade or whether I should get out of the trade? So the Geiger counter is immediate feedback on current market momentum. So we're currently long. I don't want to see this get too bearish, and that would tell me it's time to exit. So that's how you want to use the Geiger counter. It's a lot of times a good tool to have when you're already in a position. And when you get those spikes or those little islands that develop, and like I say, it's very unlikely we're going to see one today, so it's going to be hard for me to show you one. But that shows you stops being run, where there's just a flurry of buying or selling activity and no follow through. And that's a sure sign of a reversal, or not a sure sign, but perhaps a sign that there will be a reversal. Well, you're welcome, Tony and Mark. Thanks for asking the question, because there's not a whole lot of trading going on right now. Randy's asking, I forgot how to set the opening clock to my time zone. Okay. I think you might be referring to the support and resistance lines, because they have an offset feature. Custom offset hours. Now, Ben should have written in here that the support and resistance lines calculate the lines at the New York Open. Now, that would be for the North American session. So if your clock is different, then you'll want to reset your hours. And it's easy to tell when your lines are printing. You just go over and you see where they began printing. Okay, so the new session occurred right here, 2100 hours. Well, that's 9 p.m. my time, that's midnight New York. So as far as my clock goes, they're printing at the right time. That sometimes will change how they display. If you're trading, again, a market that's native to your time zone, so let's say you're in London and you're trading the London Open, well, you're trading a market like the Euro or the DAX or the Stocks 50 or whatever, you really don't care about the North American Open or midnight New York time. You would probably want to set yours to midnight London time. Oh, I see. Randy says no, he wants to know how to set the session template to the opening bell time zone. Okay. You're going to need to go to your data series. You can right click on your chart and go to data series, and here's session template. This is where you can find all the different time zones. So ETH is electronic trading hours, RTH regular trading hours, or what would be considered the pit session. And you can see there's a whole lot of different markets here. Very often you can just use instrument settings that will default to your regular trading hours more often than not. Otherwise, you need to find which market it is you're interested in. So let's say we're trading the equity markets. So US equities, regular trading hours right down there. Or you can go to the CME US Index Futures regular trading hours. It'll be the same. Or if you're trading, say, soybeans or something, you can go up here to the CBOT agricultural regular trading hours. And you can see they even have the old hours versus the new hours. It's really not that much difference. You're probably wondering, why do we have CBOT and CME? I don't know. It's all part of the CME group now. You'd have to ask Ninja. Of all the changes they make to the software, they haven't changed this. But you can see you have all the different markets here. If you're trading the life market in London, cocoa and whatnot, you have the markets there, cocoa and sugar. Hey, you can even do some of the Canadian markets here. All right, so that's how you choose your regular market hours. I have just gone with the default 24/5 because the programmers have told me as far as the software goes, that's the most user-friendly. You can also get all the information you need about the market parameters if you go to the exchange itself. That's always the best course of action. Go to the exchange. So you go to the CME group and you'll learn everything you need to know about any of the North American markets you're trading. They've got some great educational material here too. Really good stuff. If you've ever wondered how the commodity markets actually work, take some time and go through their educational stuff. They've got sim trading, and their educational materials are second to none. Their video library is fantastic. They got all kinds of great videos available to you. Some of these are a little boring unless you understand the economics behind them, but they've got some great ones, like here's Richard Branson, and they've got some meant for classrooms as well. So if you're really just looking to get going, well, I'll let you look through it yourself, but they've got a lot of stuff directed at students, you know, like high school students, that kind of stuff. And it's very well done, very interesting, and very informative, and a lot of fun to watch. They keep it light. It's not at all very heavy stuff. But anything you want to find out about a market that you're trading, like let's say you're trading soybeans. So here you can find contract specs. Oops, I'm going to get everything about soybeans here in a second. The USDA report, oh, that's probably what came out the other day. That's why soybeans got a little bit more active, but only for a session. Oh, and the Russell is moving over to the CME. That's going to be interesting. So you can check out all the contract specs about the CME, or pardon me, about soybeans. Everything you ever wanted to know about soybeans and then some. This is going to answer Paco's question. Paco was asking, Eric, when do you change the futures to the December contract? Well, same thing. Go find out when your current market is expiring. Why did it not give me the NASDAQ? Usually it's not this hard to find the NASDAQ. So here we go, NASDAQ mini futures. Contract specs. That's what you want. And it will tell you settlement. Where's the last day? Here we go. Termination of trading. Trading can occur up to 8:30 a.m. on the third Friday of the contract month. We were talking about this the other day because NinjaTrader actually suggested rolling the contracts last week. The September contract actually doesn't expire until the end of this week. So normally if you're using NinjaTrader, it will prompt you when it's time to roll, but you have up until the third Friday of the contract month to keep trading the last month, or the front month, what they call the front month. Now, how can you tell if it's safe to trade the front month? What you can do is you can build yourself a quick little market analyzer. And that's going to bring up a window that looks like this. And what we're going to do is we're going to set our columns. I don't care about the bid or the ask or the last price. What I want to know is the volume. I think it's average daily volume I want. No, daily volume. Well, we'll leave both those on. It doesn't matter. Okay, so apply. And now I have a chart that compares volume. So from my instrument list, I want to add. Oh, I would need to still have the September contract on here. But let's say we're just going to fake this. So we're going to have, well, hold on a second, I'll do this right. So we'll come back here, we'll add the September NASDAQ. All right, there we go. And September NQ, where did you go? Oh, did I do something wrong? Let me try that again. Instrument Manager. Oh, I probably pressed cancel by mistake. There it is. So what you want to do is you want to compare the daily volume average. And you want to make sure that the contract you're looking at trading is not too light in volume. So right now you can see that there's still lots of trading going on in the September contract. Still 23,000 shares so far, or pardon me, 23,000 contracts so far. That's lots. But the December contract definitely more liquid at the moment. So when you start to see one contract month become more liquid than the other, then is probably time to roll over. Now you can do this for any market you're interested in. There's also some very useful websites. Bar chart's a very good one. And it will tell you at a glance, really, the different markets and their contract months. So let's say we're looking at trading the British pound. I can go over here to the quote section for the pound. Oh, sorry, I pushed the wrong thing. Let's do this one here, British pound. That's the one I'm looking for. And you can tell at a glance, okay, here's the December contract, here's the volume, and look at the volume for all the other contract months that are available. So right now, the only contract worth trading is December. Only 6 people traded March yesterday. So probably one to avoid. Let's find something here. Crude oil is always a biggie. So the front month is October, but look at all these months out here. You could trade next June or next March. There's still plenty of volume there. Look at down here, next December, 7,000, 7,100 contracts so far. Now, of course, that's nothing compared to the 115,000 going on in the October contract. Now, why would anyone want to trade that far out? Well, you really wouldn't want to, because if we take a look at the chart, the trading is going to be much more subdued. You're not going to see, well, I suppose that could be a good thing in a market like crude oil. If you're looking for a chance to do a position trade on crude and the current month is too volatile, like you could be looking out here December 2016. The ranges will move the same, more or less, but everything will be a little bit more subdued. No, thank you. Don't want to subscribe right now. So you could use it that way also. The grain markets are very good for this. Let's go to the grains. Oh, sorry. And let's say we're looking at, I don't know, let's say we're looking at wheat. Is this the one I want? No, it's not the one I want. This is why I bookmarked the page I wanted. All right, let's say we're going to look at wheat. December, currently the front month, okay, that's the only one worth trading at 24,000. The March, not bad, 7,000. The slippage wouldn't be too bad. And again, the ranges would be a little subdued. What one was I trying to show you? Let's look at silver or gold. Silver, I think the front month is still, September might be due to expire. Yeah. Way back in when July was coming to an end and the July silver contract was starting to expire, most people started looking at the September contract pardon me, I went straight into December. And I did the same thing for gold. And people ask, well, why did you do that? Well, if you looked at the volume, you would have seen that the December contract was actually more liquid than the September contract, which would have been the front month. Let's take a look at gold. And then we'll stop beating this one to death. Yeah, see, right now, October is the front month in gold, but December is the one that you would want to be trading because the volume is much higher there. But to answer your question, Paco, essentially when the market starts to get more volume in another contract month, that's when you're going to look at trading or rolling over. Oh, Josh says you can use the rollover indicator. If I think he's referring to the prompt on the NinjaTrader. All right, we had our trade here on the, was it the Falcon or the Raptor? I think it was the Falcon. It finally had some follow through to it after hemming and hawing for a while. Market continued a little bit higher. Broke through the primary resistance, took a little bit of a hop here. Now it's trying to get some structure. We're back at yesterday's highs. Yesterday's highs, I think, were around the 43.30 mark. Easy way to tell. We'll just go back here. And there we are. There's yesterday's highs. Well, that was in the overnight, and this was during the market session. So that's probably why we're getting a little bit of hesitation now. Again, the sellers feeling this is an appropriate place to step up. But overall, not a lot of opportunities. We did get the first micro-macro cross out of the open, and it looks like we got another one here and another one here. So the hawk, probably the safest of the tools to be trading right now. And just when I thought the market was going to head a little bit lower, we got a substantial rally to the upside. Well, see, now I said we weren't going to get any of these spikes, but there's one right there. See how we have kind of this little isolated island of trading. Trade indicator is short-term bearish. That's stop running, folks. We'll probably see the market head a little bit lower from here. If I were long at this point, it'd probably be a good time to get those stops in a little bit tighter. Just in case. The needle on the Geiger counter now, full on red. The needle's still fairly shallow though, it's not like it's way down here. It does appear as though the buyers have the upper hand today. Well, I'm fairly satisfied with today's session so far. We went 2 for 2. Weren't able to take advantage of this one here, unfortunately, but still. Oh, sorry, we did on that one, not on the hawk. The first micro macro cross right here also was a 4-arrow consolidation, so we had a few things working in our favor. The eagle might have been the most difficult one to take. Although we did get a red bar buy, and that was confirmed by a buy signal right here, so a couple of chances to get in on that trade. Let's see, now the Geiger counter needle still getting red. We haven't seen a whole lot of follow through after that little island spike in the tape. But I suspect we will, a little bit anyhow. they're flattening out a little bit here. You can see it clearly on the Raptor and the Falcon. The market's starting to move a little bit more sideways. I'll just give them a few moments here to see whether or not they're going to follow through on that. We are getting another buy signal, and the trend is definitely up. And we do have a second push on this entry. The problem I'm having with this particular signal is, again, where am I going to cover this trade? If I do choose to take it above the highs, I suppose I could cover it here below the primary support. But come on, just give me a red bar there so I don't even need to worry about it. Oh, there they go. That was a quick little move. Come on, get up there. So a little bit of reaction here to the secondary resistance line. But buying still evidently very strong. Well, that's okay. We can't get them all. Oh, check out these islands in the histogram. That's the island that normally forms, just like that. And you can see a very big spike in buying, the subsequent traders absorbing it. But look at how quickly it started and how quickly it fell off. That is very often a sign of stop running. We'll see if there's any follow through on that. Oh, there they go. Wow, just a huge push by the buyers. All these HFT traders loading up the market before they let let it reverse. Yeah, Paco says there should be some key resistance around 43.38 from yesterday. But yeah, I would have agreed. Right now, though, it looks like the market isn't paying any attention to that whatsoever. Okay, we're getting a little bit more active selling now because, well, we've had the market hold here. So we've got a couple of bars. See how we're swapping. This one had a tail on it, so we know that there was some early selling there. This one has a wick, so we know the sellers took control of this bar. I'm not going to look at shorting the market at this point, but it does look as though we might see a little bit of a move lower. Maybe. Gotta love us trading room moderators, huh? We always qualify everything. It might go lower or it might go higher. That I'm sure of. I think we're starting to see some of the follow through here that we had on the Geiger counter with those spikes. Here was another little bit of an island in the buying. So with all that buying that we saw, there was some follow through, but maybe not quite as much as there should be. Now the sellers are loading up. The needle is full on red. So if I were long here, I would seriously consider getting my stops in a little bit tighter. But at least today's session had a little bit more movement to it. Soybeans are starting to flatten out also. We haven't looked a lot at soybeans. And we've got a late filter entry signal here. But the market looking a little bit bearish. We've got this lower swing high. If you're going to take the late filter entry, I'd probably suggest taking it above that high. At least cover it below the low here. Yes, we're getting a series of macro pullback signals. Normally we know there's only 2 macro pullbacks within a trend. Sometimes 3, but they tend to get a little bit weaker as the trend progresses. What I would be looking for here is a test of the extreme, and because this is the second one, it's looking a little bit dicey. If I were to take it, I would probably dial down my risk amount somewhat, or just throw a onesie on it, see what happens with it. I don't address this very often, but you can also trade these as a failure. And I don't mention it to you because I really don't want you looking for counter trend signals. The signal hasn't developed yet. Well, I suppose if we took this one here, we could short it, cover it above the high, and look for a little short-term scalp lower. The macro pullback is a pretty good signal for that. The one that we normally end up doing that to is the red bar buy or the green bar sell, as those are definitely much weaker than, say, a macro pullback signal. But that might have been the move of the day, folks. That big run up, we took our little slice of pie out of that one. But the way the NQ has been trading of late, I would not be surprised to see it just remain confined to a relatively small range for the rest of the session. Yeah, we might have seen a blow off top here with, again, all this buying going on all around here. Very little to show for it. It could be a little bit of a blow off. And prices may actually soften a little bit, head a little bit lower. I could see it getting back here to the hard edge of the Raptor and hard edge on the Eagle. That could be a fairly substantial retracement. The trend line on our Falcon already trying to turn over a little bit also. But things getting considerably quieter. This morning was quiet anyway. All right, you guys, I think we're going to button up the room. I think we're just going to see the market, honestly, I think we're just going to see it range for a while now. The market is obviously bullish. I would give preference to buy signals. However, caution is in order, as it does seem like with all that volume that's gone through the market here on these highs, that might well be a top for today. So if you are trading this afternoon, I would be cautiously bullish. And I would probably avoid selling too heavily, although we might get an opportunity to short somewhere through here. Short term, though, I would be looking for some sort of retracement, perhaps to the hard edge. Crude oil, still sideways, no real surprise there. They're no doubt waiting for tomorrow's inventory. Soybeans, mildly bullish, but still range-bound within the range of the last couple of days. So another relatively quiet day in the marketplace, but we held our own. Reminder, tomorrow's session is in the open house in the public trading room, so I will see you guys there. Be careful. I'll see you tomorrow. Bye for now.